You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. 13, a baker's dozen, soon to be 14 in the next couple of weeks, once we get all the paperwork finished up and all the production details sorted out. Soon to be 14 programs on said network for you guys to choose from, maybe even 15 if we play around with the numbers a little bit. That relies on some greasy meatball shenanigans, so I don't know how reliable that may be. So let's stick to 14 for now, which we know is coming down the pike pretty soon. And of course, where can you find all of that great options and volatility goodness? Well, easiest place, the one place with the central location for all of your options needs. Well, of course, theoptionsinsider.com. Surf on over there. Click on the Insider Radio Network tab on the left corner of the page, or perhaps if you're a righty, the radio call out on the right-hand side of the page. We made it easy for you. Two places to get the radio there. Pick your program, pick your poison, and your audio adventure has begun. And then, of course, you can also find us all the major outlets, iTunes, TuneIn, Stitcher, and so on and so forth, even via our own mobile app, the Options Insider Radio Network mobile app, available for iOS and Android. If you guys are checking that one out, they made a cool update to it a little while ago, so it looks even nicer. It's got even more functionality and all kinds of cool stuff. You can array the shows a little bit differently now and have all the feedback stuff in there and all kinds of fun stuff. So if you do have a question or a comment while you're listening via the app, it's all baked in there. Of course, you can always hit us up on I almost said iTunes. You can leave reviews in iTunes, but we're not really going to see them in a timely fashion for a show. You're best off hitting us up via the usual suspects, TuneIn, Twitter, and, of course, Options Insider on Facebook, Options on Twitter, and, of course, even StockTwits Options Insider, and via the old standby questions at theoptionsinsider.com. And, of course, for those of you who are lucky enough to be around on noon Central on a Friday, you can join us live here for this program every week. We record Volatility Views via the MixLR platform, Mixler, call it what you will. So if you want to download MixLR on your app of choice, it's pretty much on every platform. You can stream us live. You can set up an account there and follow us so you know when all the shows come out. And that, of course, if you set up an account, You can play along in the chat room, ask your questions, ask your comments, send us your feedback. Of course, you can always stream without setting up an account as well, and then just ask your questions via all the platforms I just mentioned, and you can still be part of the fun. Even though we like to see you in the chat room, because then you get to pick a fun name, and we get to identify you by some silly, fun names. So enjoy, enjoy there in the program. Meanwhile, while we're talking about the program, we were off last week. I do apologize, but it was a market holiday. Kind of hard for us to do a show about volatility trading and analysis when literally nothing is trading. So, plus I like to give my guys here a few days off every now and then. They've been angling for it, especially this guy. He's the loudest amongst them. The Rock Lobster himself. Been a while since he's been back on Volatility Views. It was good to have him back. Mr. Rock Lobster, a.k.a. Andrew Giovinazzi from the land of the pit. Welcome back to the program, sir.
After that intro, oh my gosh. By the way, the funny name is called The Handle. That's somebody's handle, in the chat room.
Yes, the username, handle, call it what you will. Lots of different titles. Moniker.
Moniker. I just thought funny name was, I think VolViews needs, you need something like The Handle. I think that's, I'm splitting hairs there. I'm sorry. Right at the beginning of the show.
You take umbrage very early in the show, sir. So you're just you haven't been on in like a month, and this is how you come on. You're with full umbrage.
Just spitting fire.
Speaking of spitting fire, you guys have been spitting fire. I'm going to do this at the top of the show here, so all you guys live in the chat room can dive in if you haven't had a chance yet. We're down to we had our final 4 on our options broker madness. We're down to the final 2. Mr. Rock Lobster, we played this yesterday. We since have eliminated 2 suspects. Who do you think are our final 2 in the final matchup for our options broker madness?
Oh gosh, what was it? It was I know Toss got kicked.
It was Options House versus Interactive Brokers and Trade King versus E-Trade.
Right. So I think Trade King over E-Trade and Interactive Brokers over Options House.
Well done, sir. That is the final 2. Trade King versus Interactive Brokers. So we'll see, and both their communities are putting up a strenuous fight. So we shall see.
I'm gonna go with IB right off the bat. I think IB will be Trade. Although Trade King seems to have a lot of satisfied people.
I will say this. I will say this. Interactive Brokers gets a lot of love with the professionals, but not a lot of people love interacting with the firm. That's one of their many Achilles heels. Customer service has always been their down front. Meanwhile, Trade King has always been active on the community front for years. They were early movers in that. That's kind of been one of their secret strengths in this contest. So we'll see if that maybe carries them to victory. Versus, people like to use IB. I don't know if they really like to extol it that often. So maybe there's that might come to haunt them.
Customer service.
Yeah, customer service, not exactly, and customer just relationships. Not exactly the strong suit of Interactive Brokers. So that may indeed be their Achilles heel. They got this far on the strength of essentially their platform alone and their commissions. So maybe that'll be enough to carry them. Who knows? Or maybe people want that final piece of the puzzle. They want to be able to maybe call their guy every now and then and ask a question. If that's the case, maybe Trade King will triumph. We shall see. It's all up to you guys. If you haven't voted yet, vote. All those platforms I just mentioned, you can vote via iTunes. I almost said TuneIn again. I'm all over the platforms today. You can vote via Twitter, because I'm looking at some of our other stuff for our app, and it's driving me crazy here. You can vote via Twitter, of course. You can vote via Facebook. You can vote via Stock Twitch. You can vote via our website, via email. Pretty much however you're going to get those votes in, we will count them. If you want to send us a carrier pigeon with your vote wrapped up around his leg, we'll do that too. I might have to get here pretty quick, though, because it's wrapping up in the next couple of days. But, yeah, our final broker showdown. Check it out if you haven't done so already. I know a lot of you already have. So if you have voted, thank you. And we'll have the winner announced next week. We'll also pick some winners who got all the fun prizes. You'll be entered into the drawing. So if you liked, you retweeted, you voted, all that stuff, you will be in the great showdown for those prizes there. And, of course, our other usual cohort here on the program, Mr. Russell Rhodes, is taking an unusual vacation. He was kind of forced to by his family. I can't blame him. He called me all apologetic yesterday saying, I'm so sorry I can't be on the program. I said, it's all right. You have to take a vacation every once in a while. Go hang out with your family. I think we'll live. But he was trying to make it work. He was going to try to dial in from his vacation. I said, no, sir, that is not allowed. You actually have to enjoy your time with your family. It's required. So he is off doing that. Meanwhile, we're going to enjoy our time with the volatility because it's time for the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review. This is, of course, the portion of the program where we break down what caught our eye in the day and indeed the week that was and indeed still is from a volatility perspective. We're recording this middle of the session here on April Fool's Day, April 1st, Friday here, right around noon Central Time. And first off, just April Fool's Day, perfect day to be talking volatility because we're all fools at the end of the day when we start looking at this stuff. And if we're not, this stuff makes us fools very quickly, as our crystal ball segment has proven time and again here on this program. This is a fickle beast to try to get your arms around, and the more you do it, the more foolish sometimes you may feel. But still, we soldier on here on the old program. And as we're recording this today, we're coming off the heels of the Nonfarms, most of the major indices up slightly, unless you're the NASDAQ, then you're up about half a percentage points. You're doing well out there. The rest of the major indices, S&P and Dow, pretty much up mildly on the day, on the heels of a slightly better than expected non-farms number coming out this morning. They were non-farm numbers. The payrolls increased by 215,000 in March. Unemployment rose to about 5%. Our economists were expecting about 205,000 and employment to hold steady at about 4.9%. So slight upticks over there, but overall, and some other numbers coming in to round out a slightly modestly bullish perspective. Even still, people kind of questioned, and we questioned on the last episode of Option Block, Mr. Rock Lobster, kind of, what do non-farms even mean anymore now that the Fed has kind of finally come out, Ms. Yellen has come out and finally done what a lot of people wanted her to do a long time ago, which is pretty much say, yeah, things are kind of crazy right now. Maybe we shouldn't be interjecting and injecting all of this volatility and froth into the space for no apparent reason. So we're kind of going to sit on our hands for a little bit, and that kind of tamped down a lot of the expectations for potential moves going forward. And so that kind of course, then there were some other comments post her comments from some of the little chattering masses among the Fed glitterati there saying perhaps that isn't exactly the case. So either way, there seems like there's a bit of consternation, a bit of disagreement over there in the land of the Fed. And all of that is kind of percolating into the number. Going into this morning, pretty much the only Fed fund future that showed a better than a coin flip percentage chance of a raise was November. So you had to go pretty much all the way out to pretty much the end of the year to get better than a coin flip chance that they were going to raise rates. Now here we are after the number that's increased a little bit. We saw the June possibility go up to from about a quarter to about 30%. And about the SEP looking right about a little bit better than a coin flip, now about 53% out there. So it's moving a little bit further up the wheelhouse there, up from Nov all the way up to September. But still, that's a far cry from anything definite. And of course, in the wake of all this, VIX Cash relaxing a little bit going into the latter half of the session, off about 0.2 of a handle to about 13 3/4 there. And with that, Mr. Rock Lobster, I turn the tables over to you, sir. It's been an interesting week from a volatility perspective. What caught your eye, sir?
Well, obviously, just the drawdown in volatility was the biggest one. We don't have Russell here, but this was a pretty solid smackdown for vol. That's the thing I noticed most. Just a pretty mass selling. I'm looking at the vol futures here as we speak. Traded on some random futures exchange. I'm not quite sure the CFE, the CFE, and the April future is finally below 16. Mentally, in our chat room, we were looking at vol trades. I've got a few vol trades on, and we're just, can that thing get below 16 and stay in April? That's kind of that 1% move per day. It's that kind of the line in the sandy sort of number for volatility, I think. And we actually had a 50-cent move range today in that April future so far. Remember this morning, Japan. Okay, this is going to shock you, Mark, but you know what? The Abenomics doesn't work. You just can't keep printing money and your economy grows.
Spoken like the diehard Maine libertarian that you are, sir.
and everybody's just figuring it out in Japan right now. Wait a minute, we don't have any GDP growth. So again, without structural reform, good luck on that one. So anyway, and then oil prices were a little lower. The Saudis saying, well, we're not going to cut production unless everybody else does. So that sent oil down. All of a sudden, for a brief moment, for about 8 minutes on the opening, there was sort of I will call it the February redo in a very reduced format. Vol jumped. The futures actually jumped a little bit. And the vol, I think VXX could only imagine, all the vol products could only imagine, small moves up. And then it all just went away. Everybody realizing, what, decent. The unemployment number wasn't bad. Things aren't totally terrible. And that was it. So once again, all the volatility is really in the volatility futures. We're probably going to close at a low tick today for VIX. And I think we're going to notch a low tick for the April volatility contract. So both of those things are, they just spell kind of lower vol. What else am I going to say? The only other thing I would add to that is, let's see where VIX Mo is. The VIX Mo, that's 1412, and the new VIX is 1369. So again, we're starting to get into a solid little contango, even in the term structure for volatility in the S&P 500, and it looks like it's getting more so. So, that's just, it doesn't mean that the market things can't fall apart tomorrow, right? Or actually tomorrow's Saturday, so on Monday. But as it stands right now, the market is definitely pricing. It's just not pricing a lot of action. There's no way around it. That's what you got. You got 10% at the money volatility in April right now. That's low. The April contract for the April next week, S&P 500 vol. Okay, the Sigma's 9. So where do you go with the single-digit vol?
But a VIX of 14 is too cheap. I don't know if you know that. Haven't you read all the various clippings out there, hither and yon, Mr. Rock Lobster? Why is it so cheap? It's supposed to be 20.
Where's Don when we need him?
Don's right now listening and laughing to himself, either that or smashing his table in great frustration.
It's just guys. All the vol is relative.
Just sell it all. Just sell it all and go away. We could have had the one episode of this show many years ago. It should have been titled "Sell All the Vol," and that would have been it. That's all the analysis you needed to do, and just move on from there. That would have been the Don Schlesinger one and done episode of Volatility Views. But you mentioned, of course, kind of the repeat or potential repeat of February there. So that we are here, like I mentioned, recording this on April Fool's Day, Friday, April 1st. So the first quarter now in the record books. Time to take a little bit of a look back, and you kind of mentioned the narrative right there. There actually it was a bit of a bifurcated quarter. There were two narratives really to be found in the realm of volatility. There was the start to the quarter, which I guess you can call the Great Tumult, kind of just came roaring out of the gate. No one really expected that. Kind of just a clean left hook out of nowhere. Took everybody by surprise. People stumbling back from their holiday breaks. We had just finished some of our last vol views for the year last year. And no one really was the only thing on the horizon that seemed even remotely to have a chance of causing some vol was the start of earnings season, and that wasn't until a few weeks into January at the very least. So it didn't seem like the year was going to start off with a bang. It was going to be a pretty resounding whimper, and boy, was everyone surprised by that. Came roaring out of the gate and pretty much never let up for the better part of a month and a half or so. So we saw a high of VIX Cash printing a little bit over 3209, right about January 20th, so 3 weeks in, right when we thought the vol was really going to actually start for the year, it peaked. Then, of course, as you mentioned, Mr. Rock Lobster, the great crushing began not that long afterwards. We saw VIX Cash hitting a low actually this week, so the crushing has continued all through this week, started in mid-February, right around the time of that high, and pretty much, or a little bit after that high, and pretty much never really looked back. In fact, we didn't get a chance to talk about this last week, Mr. Rock Lobster, because we were all off for the holiday, but an interesting piece out there in Barron's, and it's been repeated a few other places about saying, hey, did the VIX fall too far, too fast, getting into some technical analysis of volatility, which is always an interesting and perhaps dubious area. We've discussed that on the program in the past, using some of the same technical analysis techniques, and can you really apply them to volatility in the same sense you could for a typical equity and things like that. They were kind of bringing up some interesting comments about how this looked similar to what we saw going into the spike and then the fall off last year in the September-October timeframe. Some interesting stuff there. We can, of course, talk about that as well. But still, it's been an interesting narrative to watch unfold. Of course, volatility has also been pretty much on just a tear. We saw VVIX spiking all the way up to 121. That's actually about 40 handles higher than where it is right now. We're in the 82 range right now. We're right off pretty much off the lows here from a volatility of vol perspective. VVIX hitting a low back in beginning of March 3rd, about 77 or so in that range. So yeah, very much two narratives here. Mr. I almost called you Greasy Meatball. I would not offend you. That you can take umbrage at, sir. Mr. Rock Lobster. That, it's been interesting to watch. Again, starting out of the gate, the horses just rampaging, tearing. It was Fed, it was China, it was North Korea, it was China again, it was oil, it was Fed again. It was just one after another, sometimes several in the same day. Just massive shocks to the system, followed by massive rallies and massive sell-offs again. It was impressive and terrifying to watch. And then as the second half of the quarter unfolded, a very different narrative, and a lot of that volatility coming off pretty aggressively. Some may think a little bit too aggressively. Of course, as you and I have said here in the past, just because you've seen that number put out there that VIX has to hover around 20 doesn't mean it can't get far away from that for extended periods. And as you just said, the vol out there right around a 9. That makes even where we are right now, VIX Cash hovering around the 14 level, seem perhaps inflated. But that said, Mr. Rock Lobster, I'll give you a chance now. It is again the end of the quarter. What kind of was your thought process? What are your key takeaways from a pretty turbulent quarter overall from a volatility perspective?
I think the drivers of volatility are it has nothing to do with equity fundamentals anymore. We could take all that stuff and we could chuck that out the window. The central bankers have become way too big as far as the influence on the market. They used to kind of be quiet, and they ding around with rates every quarter. So they have outsized influence. All the little chirpers, you're right, outside influence, too much outsized influence, I should say. Monetary policy, at least if you look at what the volatility market's saying, monetary policy is dead, because every time they try something else, it just makes the vol skyrocket. So my always thought is you use VIX as kind of the pulse of the market, and right now the resting pulse is relatively low. And since we know volatility reverts, it'll stay low for a while until it's not, and then it will rise. But it's going to dive low if stocks don't do anything. And right now, if you don't have the catalyst to sell off because the monetary policy, Europe has basically said they're done with whatever they're doing. Anything from now on in Europe will most likely be a pullback of all of their whatever their QE stuff is. Japan's QE has gone nowhere, so there's nothing else they can do. And so from the market is saying, at least from that point of view, there's no real volatility now coming out of the central bankers, because they don't really have any moves left as far as stimulating stuff. And that took the vol down. The second part is currency. The market hates currency manipulation. So when China was, I think China kicked it all off in August with the devaluations, surprised everybody. Market hated that and started selling off right away, drove the algos crazy. And then you have oil prices. So those were, and the oil prices somehow is morphing into stress in the high yield market, and then all of a sudden everybody sees credit crisis again. I think, more private investors are holding all that paper, and it's not so much, banks are leveraging the crap out of it and insuring it all. It doesn't seem to be the problem that it was in the past. And it also looked like part of the turnaround is some of the creditors were saying, well, maybe we will change the terms a little bit to try to stretch things out, so that released some stress. So, I mean, those things are still going to be with us, right? Central bankers, they're not going away. Currency, flimmery, that's not going away. And oil prices look like they're going to stay low. There's still the storage is, pretty much at capacity. I think I just read a stat. There's never been more oil pulled out of the ground and in storage than there is right now. So those things are still here, but somehow the market has figured out a way to live with it because in and of themselves, they're not catastrophic. So, if you get some kind of responsible government policies, fiscal policies, that ever happens in my lifetime again, the worry's off the table. That all that stuff really is what really drives volatility. And for right now, it's muted. And with it, stock prices popped a little bit, and we could be back into just one of these markets where it doesn't really go anywhere. We don't really rally, we don't really sell off. It's just there's no impetus to do anything until we have some technological revolution, or we get some growth, or something somewhere starts to kickstart the global economic engine again. Because right now it's just I think it's kind of sputtering, and the volatility really is telling us more than anything that things are kind of just cruising along with kind of tepid global growth as we start paying off, debts for the next 20 years. And I think that's where we are. That's what the vol tells me anyway.
You can't really tell which way you lean, sir, politically from all of your comments. It's impossible. It's very difficult. You're very shy in that sense, sir.
I know. Well, what's funny is everybody keeps trying to do the same thing and get a different result. And that's what I don't understand. It's like, okay, it doesn't work because governments have to pay all the money back, right? So they got to get it from somewhere. Businesses, they have to pay the money back or they go bankrupt. So I don't understand why they don't get it. But, people still want to dream. They want to dream the dream that they can just inflate their way out of everything and it'll all be cool. But one day that chicken will come home to roost. I don't know when, but it is a sad but inevitable fact, unfortunately.
Well, as you're talking about that, I will get a chance to invoke our much missed friend there from the corner office. Couldn't be on the show today, but he did send in a blog post he thought would be interesting for us. He wrote about over the weekend. Remember, it was about a year ago, so maybe a little longer, Mr. Rock Lobster, we last chatted on the show about the interesting divergence we saw emerging between RVX and VIX, and that seemed to drive a little bit of flow out there in that their product. And as we are looking at it today, and as it caught Russell's eye over the weekend, he puts up blogs all the time over there on the CBOE Options Hub. If you're not checking that out, listeners, surf on over and check it out. And he wrote with an interesting little graph there about this exact issue. He noted last week that yet again that divergence is starting to emerge, and seeing it there with the gap between RVX versus VIX. If you look at this chart here, again, you can check it out. I'll put it in the show notes to listeners, a link to this article so you can see it for yourselves. And if you're in the chat room, again, just surf on over to the Options Hub and search for Russell, and you'll find his articles. It's his weekend review, Russell 2000 Options and Volatility. And you'll see here that on the chart, and the gap has increased to about 30% and indeed closed, with RVX getting about a 30% premium over VIX, and closed every day last week at that level, which is pretty much pushing highs, certainly for this year. High for this year. The highest we've gotten close to that is about probably like around 24, 20, maybe 25%. It's hard to tell here with the legend of this chart, but interesting stuff here nonetheless. I don't know, Mr. Rock Lobster. I'm looking here today. It doesn't seem like this has been enough to generate some trading activity for our friends over there at RVX. Of course, the show brought to you by Russell, as well as, of course, by our friends over there at CBOE Live Vol. If you are wondering, hey, Where do you guys pull all this great data, like Russell, like Mr. Rock Lobster is pulling numbers about implied volatility versus historical, or I'm always pulling options flow data and things like that? Well, we pull it all from our friends over there at LiveVol. So as I mentioned at the top of the show, if you're listening, particularly if you're listening live, surf on over to livevol.com. They got a free trial. Kick the tires. Doesn't cost you anything. Go for it and tell them we sent you. They'll love to hear that. So yeah, if you're wondering where we get all our data, including this stuff about RVX right now hovering right around about 18 and a quarter in the old RVX Cash. Don't say that too often here on the show, Mr. Rock Lobster, which is a pretty fairly hefty premium right now, talking about almost about 4.5 points, close to it. For versus our old friend, the VIX Cash. We'll see if that comes down a little bit. I know you like to watch some of these discrepancies. I would call them trading opportunities, but it's kind of hard sometimes to cash in on the RVX leg. That said, has this one caught your eye as well, Mr. Rock Lobster? And what are your thoughts here on perhaps increasing concern for small caps relative to large caps in the current economic conditions?
I think what looks interesting is just a straight ARB. You just sell an iron butterfly and IWM and buy a straddle or a strangle, something cheap in the SPY. I think it's setting up pretty well for that right now. We have done that before in the old pit chat, set that trade up to try to generate some dollars for us. And usually when the spread's this wide, it works pretty well. So I try to do it where I take in more premium in the spreads that I sell than the SPY straddles I buy, and usually we do trade it like on a ratio. So you'll do like 10 iron condors or something like that and buy 2 SPY straddles only. So in general, I think it works pretty good. When the juice is this pulled apart. So I don't think that's a bad trade at all. So there you go, listeners. You get a freebie here from Andrew from our chat room, because that's exactly the kind of stuff we're always looking at. We prefer Vol Arb whenever we can get it. And thanks to Mr. Russell for waking me up to that.
Yeah, he does actually highlight an interesting little trade in there. I didn't get into it. He was talking about one of his rut trades he likes in there. So I'll leave that as a bit of a tease for you listeners. If you want to see what one of Russell's favorite setups apparently is out there in rut, then head on over there. I'll give you a hint. 1060 puts in April. That's just part of it. You can find the rest if you surf on over to the CBOE Options Hub. Meanwhile, we're going to keep on rolling into the realm of the mothership of all things volatility, a.k.a. the VIX. Was a fairly light volume week from a VIX Options perspective. Looking back on it, we've seen some pretty rocking and rolling weeks over this quarter. This week, not exactly one of them. Only one day really spiking aggressively over the ADV, about 700,000 contracts on Wednesday. Most of the other days this week, pretty much around the 400, 450 level, which is fairly south of about that 640,000 contract ADV hovering out there. And as we're recording today, right around noon Central here, about halfway, a little bit more through the session, and looking at about 250,000 contracts having gone up out there in VIX land. So it seems like today is going to be another light day. Non-farms not really moving the needle, Mr. Rock Lobster, today. Not really pushing people to come in and sling themselves some VIX. We'll see if that continues. Looking back at the week that was, again, a light volume week, but a few trades did catch our eye coming in yesterday. Looks like a pretty sizable vertical going up out there in the May timeframe. May seems to be stealing a lot of the thunder for a lot of the trades we're seeing these days with the May. Looks like the May 2025 going up for about 67 cents, 51, nearly 52,000 times over there on these both strikes, as you might imagine, have fairly sizable open interest on them. So it probably is indeed opening, though, out there. And these don't see a lot of closing in May just yet. Of course, we will get to that maybe in a little bit. June also saw a bit of vertical love. It was the June 22-27 vertical going up on Thursday, 32,000 times. Looks like paper buying, doing that for about 60 cents on that one. So getting some upside love. People perhaps positioning, saying this protracted sell-off we were just talking about, Mr. Rock Lobster, perhaps a wee bit overdone. Either that or perhaps hedging against something else they have on out there in the space. Either way, it's a pretty bullish overall play right there on the overall of the of these VIX verticals here. Looking here also on the Wednesday time frame, there's been some weird trades out here on the 25 handle, Mr. Rock Lobster, in multiple months. We'll start off in April. The April 25 saw a weird trade going up on Wednesday with 29,000 of them going up right around about 220. It would be actually. These are off. We're closed by then. But still interesting stuff here. You saw the 25s going up in April, 29,000 times. Paper selling them for about 20 cents. And then promptly about 30 minutes or so later, coming back to buy them 29,000 times for 25 cents. That's usually never a good sign that you're giving up the ghost that quickly. And for a nickel on a 20-cent option, that could be painful a few thousand times. You don't see those that often. Either the prince got screwed up there, or it looks like our friend here perhaps deciding discretion is the better part of valor and getting the hell out of Dodge on those pretty quickly. And then talking about scratching kind of dubious trades on the 25 strike, we highlighted some of these on Monday on our option block show as well. There was a weird, I think you can call it a stupid and then versus or a call tree or related to a call tree. We saw on Monday it was, again, the 25s, the May 25s, paper coming in, selling those for 77 cents, and also the 28s for $1.10. So doing effectively a short call stupid, doing that about 20,000 times. And then a little bit later, the same day, same session, we saw paper coming in buying 35,000 of the 19s and then selling 35,000 of, again, the 25s and the 28s, both doing all those 35,000 times. So we have one trader coming in just blasting out an upside stupid to the tune of 20,000 contracts. And then another, again, we kind of debated this on the option block. I'd be curious to get your take, Mr. Rock Lobster. We were kind of debating. I thought maybe this paper was inspired by. Sometimes these trades get shopped around a wee bit before they're executed. Someone seeing this and deciding, I actually like to do this a little bit better, and I'm going to take advantage of this trade and maybe put on another one. Maybe Mark thought it was front-running. It's not really front-running here, given the fact that it went up later. So it'd be unless our friend here earlier, and if it was front-running earlier, he got a much worse price for his 25, so he might regret that front running. But Mark's a little bit more cynical perhaps on that than I am. Either way, it seems like maybe a little bit of information leakage was afoot, or at the very least inspiration, if we go the charitable route. So some weird trades pretty much across the board this week, particularly on the 25 strikes. Mr. Rock Lobster, any of that catch your eye? And what are your thoughts on those trades, or perhaps some others maybe caught your eye this week that you thought were worthy of note?
I did see a lot of puts trading in VIX because you have that. You have a lot of future contango, so people are trying to ride that down, buying basically a lot of puts that are in the money, and then when the future starts to drift to the cash, and woohoo, they cash in. So, this is like kind of common when you see all these kind of trees and stuff like this go up once VIX gets around, 13, 14, whatever, everybody comes in, and they're trying to basically buy the next rally. And not pay anything for it type of trade where, and then what happens if you don't have anything really happen in a month, you get all that decay on the upside and you're left with your kind of near the money calls. You end up with kind of it all for a nice little credit if everything goes well. So I think you see more of these types of trades once vol gets lower. I think customers are getting a little savvier right now. I mean, you've got VIX at 1361, but the April future is 18. So, I'm sorry, the May future is 18. So, you're already paying $4 over for anything you might buy. Actually, the May future is down to 17.35. It's still $3.50 over parity, but it was $4 over. So if they're going to buy something, that 19 call is actually much closer to the money than it would appear. And that's the kind of trades they're looking at. The June future is 18.22 right now. So, a 19 call there is only $1 out of the money. So a lot of those trades are going to just decay like crazy, even though they do them for a debit, because they're selling those really decay sensitive options. So they're I can see why they're popular when the vol goes down, because I think, like I said, customers are savvier. They just don't go buy a bunch of out-of-the-money calls. They'll buy something near and then sell all the skew on the upside, and then let time work it out. And if you get a little jump in VIX, the whole thing pays.
Yeah, it's certainly some funky paper. We had an interesting back and forth on that VIX trade. If you want to hear that, go back to Monday's Option Block, listeners, and check that out for yourself, as well as, I can't remember the last time you saw someone, it looks like scratching for a loser, actually. A big trade that quickly in VIX land. It's certainly been a while. So some weird setups abound. That usually happens, like Mr. Rock Lobster said, when we start getting around these funky ranges, these funky extremes in VIX land. We start to see some interesting trades going up. Speaking of what's interesting, the masses out there, these are the hot strikes in VIX land right now, top 10 things that are lighting it up. Starting off, number one with the bullet here is the April 25 calls out there, about 313,000 contracts open. Down to number two, we got the May 30s with about 272, so a fair gap between number one and number two right now. Number three, 260, the June 23 calls. Don't see a lot of June on the list yet, but June clearly lighting it up here. And then the ever optimistic April 30s coming in number four, about 240,000 contracts open there. Then we fall off a cliff to number five, the May 25s with about 175,000 contracts open. Number six, the April 28s, 164. Number seven, the April 27s, kind of going down the chain there, 155,000. Number eight, the May 20s, 135,000. Number nine, the April 20s, with about 130,000. And number 10, rounding it out, clean sweep for the calls this week. Not a single put in sight, despite Mr. Rock Lobster's noting a few put trades this week. Still, no puts on the top 10 list, about 126,000 of the June 17th. Interesting strike selection there, going up for about total, bringing it to a close, our top 10 list. Total, about 6.85 million contracts open. Pretty robust number, about 5.25 on the calls and about 1.6 or so on the puts. Let's move on to some other areas, Mr. Rock Lobster, that are lighting it up now from a volatility perspective. And we haven't been on in a couple of weeks, so we get to look back a little bit. It's been interesting things rocking and rolling in the land of the Texas tea, the black tar out there, a.k.a. the black gold, a.k.a. call it what you will. Call it the crude oil stuff. It's been moving, rocking, and rolling since we had our last episode. We were kind of just in the beginnings of that rally to the upside we saw in crude land. We saw, pretty much crude spiking up a little bit. We saw some love starting to emerge there for the call wing. We've been waiting for a while from a volatility skew perspective, Mr. Rock Lobster, for those calls out there in WTI and others to get any love. And they started to get a ton of love for a little while there in that initial spike, as you kind of might expect. People were rallying, the crude was rallying, people were trying to get in ahead of it, get some upside. That seems to have since kind of faded. Right now in a vol land, OIV, OVX, the two VIXs of crude hovering right around a 46 level, so well south of their peaks. Talking about looking back at Q1, they peaked at around 80 back in mid-February, so almost pretty much half of what they were a month and a half ago or so out there. So crude vol having come off quite a bit. I got the chart up here right now, the WTI skew chart, courtesy of our friends over there at Quick Strike. And it's looking, once again, Mr. Rock Lobster, puts leading the charge, puts the order of the day. If you've been following along with the big macro debate out there in crude land, will this freeze materialize? Is it kind of much ado about nothing? You're already hearing news about maybe Iran and some others perhaps doing their own deals and others unfreezing areas anyway. So maybe all this talk of a production halt / freeze is really kind of just that. It's just noise. And clearly the worry right now is that is indeed the case, because the puts are leading the charge. Hefty vol premiums all the way down south of the 30 handle into the 28.5 and 26 range. Those puts carrying hefty premiums, and far out too, all the way out to the end of the year and beyond. So again, it seems like that structural concern for crude is yet again playing in. And of course, Mr. Rock Lobster, if those do come to pass, if we do indeed perhaps retrace some of those lows, I think we can expect these mid to low 40 levels out there in OIV and OVX to get a wee bit higher. Would you concur?
Yeah, I think it's, the thing with oil right now is I feel like it's not like there's been a lot of noise to push the price up, but there's been a lot of smoke but no fire. I've never seen the hard production cuts. I still look at some of the offshore drillers are real sensitive. They're still not doing well, and those are the ones obviously kind of the swing where you would think if there was some real potential there, they would be back in shape. So it would not surprise me at all to see vol go back up in there. I don't know if we're going to see the 20s again in oil, but anything's possible. And, unless they really, but the one thing that's happened is a lot of shale producers have slowed production down. So whatever the Saudis were trying to do, they succeeded in smashing the U.S. shale oil industry, and we'll see what happens after that. But again, cheap oil means nobody's sticking in solar panels, and I guess that hasn't had much to hurt Tesla. But I wouldn't be surprised to see oil kind of make a move back up. However, this volatility used to be the old sale level. As funny as it sounds, even with volatility in the mid 40s, you would have been hard pressed to sell that because USO volatility when oil was $100 was about 18. And it wasn't going anywhere. So it's a different product down here. I don't think 40 volatility is particularly expensive for it. So again, it would not surprise me to see it rock and roll just a little bit from this level, but I wouldn't spend a ton of money on it.
Don't let Don hear you saying you're talking about buying vol. But that said, you're right. It is amazing how much the frame of reference changes, the narrative, the context of volatility changes when a product goes from the 120 range or so down to the 40 or 30 range in the span of a year or so. All these things we talk about, skew charts and others, kind of get a little crazy when you have those kind of extreme movements. And you're right. Now, all of a sudden, the new frame of reference, 40, is remarkably low given recent events and recent history. Whereas you're right, over 100 handle in crude, you're going to be hitting that bid at 40 all day long. Interesting stuff. Let's move on to another commodity that's been of interest of late. This is the shiny stuff. Good old gold and gold VIX hovering right around an 18.5 right now. Good old GVZ, of course. That one also spiked back, looking back at Q1, spiked in mid-February, hitting a high of about 28. So not quite 2x where it is now, but pretty darn close. And those were levels that it hadn't really hit since June of 2013. So that was nearly a 3-year high for the old gold vol. Things are a wee bit quieter out in gold land right now as well. We were talking on the show yesterday, Mr. Rock Lobster, the Option Block show, about how gold bulls have pretty much been run over this quarter in a good way, really. It's not a bad thing to be run over for a bull. When the upside move outpaces even your most optimistic expectations, I don't think anyone's really going to have a problem with that unless you're out there writing calls to the upside all day. Then maybe perhaps you were taken a bit unawares. But yeah, most of the most optimistic projections were saying that of course the levels right around 1235 or so, 1234, where we were closing, were pretty aggressive, and of course that translated to some love in the options as well. The skew hovering right now. I'm looking at the chart as well. It's pretty smile-tastic, to use a fun adjective for it, Mr. Rock Lobster. For a while there, it was very call-heavy. It was all calls. In fact, we were joking when I was doing some shows down at the FIA Boca conference a few weeks ago. It was so call-heavy that even relatively staid iBank research desks were coming out with papers extolling the virtues of 1x2 call spreads in GLD and other products. And when banks are doing that things are pretty rich out there. We're nowhere near those levels again anymore. The puts have a little bit of love. Skew is still relatively light compared to where it has been in the pretty much the 16th percentile overall going back for the past year. So saying that the calls are not perhaps as rich as they were not that long ago. Still rich, but not anywhere as rich as they were. Anything catching your eye out there, obviously, other than the extensive bull run we've seen out there in gold, Mr. Rock Lobster, and the resulting volatility crush we've seen out there in gold as well?
Yeah, I think some plays are starting to look better, like 1x2 put spreads and things like that, because the curve is really flat there. I don't know what made gold do what it did. It was a pretty good run. It was basically $20 in the GLD. So, but you could still sell those upside calls and buy downside puts and buy underlying for not very much money. That's basically just a call spread. And it looks, you're getting great prices for those upside calls in gold, just not as crazy as it was. And if you were doing 1x2s for credits and things like that, once you hit like 120 or something, you could set up 25, 30 1x2s for a credit. All of a sudden, those kind of trades start to look interesting. So you're right. We're not there again. But I think gold, just like everything else, somebody just, threw the brakes on it. It's like they threw the brakes on stocks. They threw the brakes on volatility, and they threw the brakes on gold. Just everything's going to stop right now. And that's what we got.
And speaking of what we got a lot of letters, a lot of questions from you guys. We've been off for a couple of weeks, so we'll see how many we can squeeze in. It's time for the Volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the Volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Volatility voicemail. Mr. Rocklobster, I thought it was just going to be you and us on the show today, so we'd have time to get to a ton of questions. Been off for a week or so, and here we are. Just as usual, you and I, we fill the whole show. Don't even have much time for questions left, but we'll squeeze in at least one here. Let's see, one from, I like this. As you say, Mr. Rocklobster, his handle, cha-ching. He says, how does last month's VIX backwardation streak stack up to the run above 20 from last year? If you're recalling, he's referring to the VIX Cash. We were talking a lot last year about the length of the time above 20. Oh, how long ago that seems, Mr. Rocklobster, now that we're down here in the low teens yet again. Seems like ancient history when we were talking about the length of the streak above 20 in the VIX Cash. But of course, he's referring to the backwardation streak of the futures. Of course, that condition where the near term of the curve, the front month portions getting a bit extreme bid more than the farther off months. And we were indeed backward for quite some time over there in the VIX futures. That came to an end last month, as he's referring to. And this would normally be the portion of the show where I could ask Mr. Russell, because he's usually got all this data ready to go. Thankfully for us, he's not here. But he did write an interesting little blog on this after the streak came to an end with some great data. So I'm going to crib from him because he's got the charts here and everything. So he's done my work for me, which is nice. He put up a chart here. You can check this out again on the SIBO Options Hub or over there at the Options Institute, listeners, where he breaks down that streak. It was 30 days that the VIX was backward. It started back on January 4th and it went all the way to February 2016. So that 30-day streak comes in when you're looking at the top 10 chart, actually number 4. So it's a pretty decent streak for backwardation, all things considered. A lot of the other ones below it, 5, 6, 8, 9, 10, all those were 27, 21, 16, 12 days in a couple of cases. So 30 days is a pretty extensive run that actually shows some decent concerns, some decent things going on in the marketplace. Number 3 is about 39 days that goes back to from January 14th to March 11th of 2009. So a pretty tumultuous period. You might have guessed where the top number 2 one is. This was September to December of 2008. That was a 63-day period. And the number 1 one, actually, Mr. Rocklobster, let me turn this to you because it's a bit of an odd period. You may not guess off the top of your head first. When do you think was the longest period, not just the date-wise, but not just the length-wise, but when do you think it actually occurred, this longest period of backwardation in the VIX futures?
Probably like the Euro crisis time in 2011 into 2011. That would be the only other time I could think of.
Really well done, sir. I thought some people might have guessed some other periods around 9/11. We didn't have the futures then, but you can of course backdate the data to kind of look at them then. Maybe kind of cheating to put that date in there, so maybe not. But there have been other tumultuous times, certainly other times in 2008. But you're right. Actually, well done, sir. You get the August to November of 2011, 76 days in backwardation, so over 2x what we saw right now. So there you go. Everyone out there who was wondering, including our listener, Mr. Cha-ching, I like that. That's how it stacks up. He also put some interesting blurbs in the article about how the market fared after those streaks. And for the most part, they were pretty tepid after those streaks. In the initial month after those streaks came to an end, with the exception of 2009, the market rallied about 15.5%. In that time frame. Other than that, it was sell-offs or mild, tepid gains in the subsequent months. Actually, April 2009, the market also rallied about 8%. So those were wild times. But aside from that, the at least initial 30 days were pretty tepid. You get 90 days out and 250 days out, things get a little bit crazier. So interesting data out there. So even though Russell couldn't be on the show today, I wanted to give him a little bit of pride of place. Anything to add here, sir, for our friend Mr. Cha-ching, on the historic nature of our recent backwardation streak?
I just, what is there to trade on that? To me, getting out of backwardation is the most significant vol event you've got. I think it's more significant than going in because usually takes longer. But when you go out, it's generally a signal that the market, whatever's been going on, is not going on any longer. So if you're long vol, you get out of the way because she can come crashing down on your head. That's all I'm going to say there. It's big. It's one of the great market tells of all time when you drop out of backwardation.
Indeed, and as that chart shows, check it out for yourself, listeners. You can see how the market has performed coming out of those backwardation periods. Initial 30 days kind of tepid, but then beyond that, there's some rocking and rolling 90 days and beyond. Kind of interesting. I thought we'd have time, Mr. Rocklopster, to get to this mega question from Jeremy from NASA. He essentially sent in his PhD thesis. I guess we won't have time to get to that because that's pretty much about 20 minutes in and of itself, just reading the question. We'll save that for another day, perhaps, as we keep on rolling into our final segment. It's time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everyone, welcome to the crystal ball. This is the portion of the show, of course, where we predict recklessly, some may say wildly, at what the future of the volatility gods hold in store. We last did this a few weeks back when we were predicting for the subsequent kind of holiday time frame there. So that kind of screwed up the time frame a little bit. And, of course, we were off, so we couldn't really come in and say it. We were all pretty much as the last show we were predicting. I believe Mark S. was on the low end. He was saying about 14 and a quarter. I was in the middle there right around, I think, about 15. And then Russell was on the high end of about 15 and a half to 16. And it looks like when the show would have taken place, Russell was kind of leading the charge. It was between me and Russell. It was about between 15 and 15 and a half, depending on where you looked. So that was our last show. As we move on to today, of course, we are post Nonfarms. That was kind of one of the big potential drivers for volatility today, and that always kind of makes predicting on a day like going into today like today anyway fairly challenging because you never know. Vol could be one thing in the morning. It could be a very different thing in the afternoon by the time we're recording this show. So that always makes days like today challenging. That said, the Fed kind of took the wind out of non-farm sales, and right now, vol kind of hovering right around a 13.5 in the VIX Cash. Kind of a resounding whimper out there from the non-farms land. Doesn't seem like, as we were alluding to at the top of the show, there's a heck of a lot going to really light it up going forward. That said, Mr. Rocklopster, you haven't been on in a while, so you probably missed playing this oh-so-dangerous game. So I'll give you a chance to dive in here. What are your thoughts for this time next week in the VIX Cash land?
I'm going to say 1301.
Oh, you're killing me. I was just going to go right I should go first. See, like, people get mad at me when they want to go, so I give them a chance to go first. Then you steal my exact thing. All right, fine. I was going to pull the prices right around that level too and be obnoxious, but instead you stole my obnoxiousness.
Do 1302.
You stole my obnoxiousness. Yeah, so you're better closer without going over. All right, you know what? So if you're going to go 13, then I will go the more dire end of the spectrum. You're saying 13.01. I love the specificity we're getting these days. So was someone? Yeah, Mark was saying 14 and a quarter the other day and stuff. 13.01. So I'm gonna go. So you're going 13. I'm gonna make it fun. I'm gonna go for a little bit of more of a apocalypse Volpalooza. Like we were saying, the vol out there in the marketplace right now, not really much to write home about. Even these levels could be fairly said to maybe be a bit rich. So I'm gonna say we're off a full handle out there. I was gonna go as far as 12. Maybe that's extreme. I'm gonna say 12 half. I'm gonna go all the way down to 12 half to give us a little bit. Actually, no, I'll be crazy. I'll go 12. We'll have fun, and I will say. So we'll have you being more of the even keel, and I'll be the dire all is over from a volatility perspective predictor. And Don will be saying sold to both of us. As we unfold. All right, that's going to do it for the crystal ball. Here we are, filling an hour, just the two of us, Mr. Rock Lobster. Who'd have thunk it? But it's always fun stuff. But unfortunately, it's all the time we have for the crystal ball. It's also all the time we have for this episode of Volatility Views. But before we go, as always, Mr. Rock Lobster, what is cooking in the land of the pit?
Calendar. Actually, this will be a subject tomorrow. Our calendar class on Saturday. So you want to learn how to trade calendars, learn how to trade that crazy volatility we were talking about. That's what our calendar class will do. So, and join us, optionpit.com/events.
I was going to say, maybe tell them where to go. It might help. So I'm glad you got that in there. You know, this is your first plug. You haven't really done this before. I know it's challenging for you.
I know.
Optionpit.com/events to learn more, listeners. And like I said, all this fun data we're talking about, realized vol, implied vol, historical data, skew, all that fun stuff. Where do we get that? Well, of course, our friends over there at CBOE Live Vol. So if you haven't checked them out, surf on over to livevol.com to kick the tires for your very own and get it for free. It doesn't cost you anything. Costs us stuff. Costs everyone else who uses it money. Not going to cost you anything to kick the tires. So surf on over and try it for yourself. If you're an options-centric analytics guy like we are here on the show, I think you're going to like it. And we use it every day. So even if they weren't sponsors, we still be using it. So kind of nice that they're on the show, supporting the show, because we like to use endorse products that we like here on the program. Surf over at livevol.com to learn more. And of course, our friends over there at Russell Indexes as well, russellindexes.com. And of course, before we go, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the program. And of course, for those of you who tune in live, we love to see you guys as well every Friday, noon Central, 1 p.m. Eastern, via the Mixlr chat room and the Mixlr app. We love to hear you. And of course, you can send your questions in there or anywhere else you'd like to send your questions. We love to hear from you guys. And we'll see you next time for more Volatility Views.
Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.